Hey traders, what's going on? Jamie Saettele here, midweek strategy webinar with SB Trade Desk for 12/21. Let me know quickly if you can hear and see. And if you can, I will get started. And Eileen, I see your question, and you read my mind. It's the first thing I was going to go over quickly anyway. So with the square root progressions, what we want to do is, look, trading's about reference points, right? You have to have reference points to reference entries. And this is something that I'm looking, forward as a way of really improving my own trading, right, in tactics. Because really there's two ways, or two parts to market speculation and trading. It's the trading part and the analysis part. The trading part's really the trading tactics part. That involves the risk management, the entry, the exit, and following many different markets and trading on at sometimes an intraday basis, but usually for a couple days at a time. You need points of reference to work with that make sense, and they got to be maybe something that's not too frequent, but something that's not too infrequent. And I think this really solves the problem. So the square root progressions, I'm doing it off the year open. I know a lot of people, some traders, GAN traders that will do square root progressions off of, say, a major high or a major low. That does leave some subjectivity because you are really having to decide what's the major high or what's the major low. I mean, you could do it based on a 52-week high or a 52-week low, right? But that's really going to, if you're in a trending market, it's going to change constantly. If you're in a stagnant market, you will have tighter and tighter levels, basically. So what I thought would be a good idea to do was to do it off of the year opening price. Obviously, something that I've looked at for a long time and used for a long time is the year opening price. So this is a great, add-on, if you will, to that. And here we have the DXY, the dollar index. All right. So how to calculate these is simple. The year opening price, as you know, on my charts, it's always in magenta. Okay. So 98.62. So I'll take you through a calculation. Okay, so let's take 98.62. And it's important, by the way, this part's important. You got to do it without decimal points. Okay, so we'll do an example with euro here in a second. So 98.62, find the square root of that. Okay, so to the 0.5 power. All right, and you get 99.30. So that's 99.30 points. All right, so then what you do is take 99.62 and you add that. And you get the next one is, 161. All right. And you can take the next one and add that, and so on and so forth. And, if we look at euro, for example, let's look at euro. So euro, you're looking at 108.72 is the year open. So we're going to take 108.72, the 0.5 power gives you 104 pips. Okay, so 108.72 minus 104, oops, 107.67. Okay, and then subtract from 107.67 104 pips. So 107.67 minus gets you 106.62, 63. Okay, and so on and so forth. So you can see symmetry in these things a lot of times. If we look, for example, with euro, yesterday's low was one tick above the fifth square root progression. Eileen, why did you add on DXY and subtract for Euro? Well, it doesn't matter. You can do either one, right? I'm just saying because to get to different levels, like if I added 104 from 187, so 108.72 plus 104 pips gets you the next one on the upside, which is 109.76, and so on and so forth. Okay, so you just keep on going. It gives you great points of reference. So we have here the fifth square root progression for Euro, all right? That was 103.50 yesterday. 103.51 was the low. So how, didn't you have to work this into, a strategy of sorts? And the way I would look at it is, looking at our other tools, for example, I know that 105, here's the 4-hour chart, 105 is a big spot for me because I've got the slope here along the former, supports, if you will, for the most part, right? So a move above 104.54, which is the next square root level, which happens to be very close to the March 2015 low, that wouldn't necessarily turn me uber bullish by any means. However, if we got up to 105, and got through there and we were looking constructive, I would then look for support at least 104.54 on the next side up. So you can see it's a progression, just like it's, square root progressions. You're looking to see how the markets react at these various progressions. Right before FOMC, for example, we kept pressing into resistance that we had here from 106.63. 106.67 was also the ECB level, but that was kind of bearish activity, right? So the fact that we were pressing into his resistance it was right before FOMC, so I wasn't going to put on a short at that at that moment in time, but it was bearish behavior. If the market would have gone through that level, you would have then come back and looked at this level as being a support area and a place where you could be long into it with tight stops, okay? So that's just a very quick rundown. I will note that these square root levels, they seem to work really well on a Kiwi, on New Zealand dollar. You can just see some of the turns that we've had on Kiwi, like right at it, just at various points in time. 72.40 was missed by a tick. It's one reason as well why my target for any sort of Kiwi short position, is down towards the 66, 60, 66, 90 region, right? 66.60 was really, that was a progression level that, support back here in March, didn't quite get to it in May, but it points out a pretty obvious dividing line, I think, around 67, just above. So, just having these on the chart, I think also can offer some value. By the way, still like the idea of being short Kiwi. Every time it bounces, I don't get triggered on it, but I think you know where I stand on that. All right, so let's run through some charts, and we've got a pretty light room here today. Oh, it's some people starting to come in, but yeah, let's run through some charts. All right, why don't we start with DXY? We'll go. Okay. So here's my thing with DXY. All right. It's pretty obvious to anybody that pays any attention to the markets, especially from a sentiment perspective, that we are in full-blown bubble euphoria type of mode, and it's dangerous it's dangerous on either side at this point, right? Like if you had deep pockets And I'm not saying do this. Don't, okay, this is not what I'm saying to do. But selling euphoria will work, especially in FX markets, commodity markets. However, you can extend for a, fairly prolonged period of time. I mean, look, we've seen the magazine covers, and that was like down here, The Economist. We've seen some of the articles I've shown you as far as some of the quotes. No one loses, blah, 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 right? Simple cycles say that we're really, really, really long in the tooth. But here we are breaking above this level, right? So I'm wondering if it's something like this. Something like back in July of 99 or even in July of 2001, where you broke through the resistance, but it was a total fake out. And, there's a way to play this. If we look at this on a daily chart, for example, go back to the daily chart. Okay. So if we look at this on a daily chart, the market's up here, and once you come back into it with a reversal, that's your signal, that, okay, we've really got to go the other way now. Let's go to the 2001 instance. Same idea. Once you come back into it, this one you actually ended up kind of retesting it, right? So same idea. Can dollar extend higher? Sure. We'll get into that. But here it's euphoric, and it's something that I'd rather be on the short. The reward to me is on the short side. I want to bring in a chart from a really long time ago. This was the post from last December 30th of 2015. And some of these charts, kind of interesting to look at in hindsight, I guess. So we had this analog that we were following at the time. At the time we had this, and we were looking for, going into the new year of 2016. We were looking at a top maybe in March and a low in early May, and then a new rally. Well, we all know that we topped actually in December. We didn't top in March. You had the secondary top in late with the Bank of Japan, and the NERP thing was right here. But let's put that overlay on and see what that looks like updated. So again, we were looking at this here. And if we put this on, you do get, the low was in early May. It was kind of right on the tick, actually, right on the week. And then it has us right here. Okay. So, on a price basis, it looks like you're kind of there. If this were to really, continue to try to follow it, at times it hasn't been super close, at times it has. So if we were to, kind of mimic this, you'd probably get a couple weeks lower and then get one more move higher. But the way I want to play it is, if we do get back below this parallel, back below here, to me, you have to be bearish. All right. And, if we're also, here's another thing, if we're looking at price action from the May low, right? This does not look, at this point, it doesn't really look like it's a completed impulse, right? It does look like you need another drop and another move higher to make a 5-wave move, right? Because you'd have here 1, 2, 3, 4, 5, 6, 7, 8, 9. But that's the thing. You do have 9 waves up. Okay, so in that case, this would be wave 3, which sounds preposterous because it's not necessarily, third waves are supposed to be your real powerful ones, right? But if we look at it from this standpoint, it actually doesn't break the rules. You actually do have wave 3 being not the shortest wave. So it's, again, that's a possibility. The big thing in all of this, I can't stress this enough, is that you need to come back below here. And if we look at this on the daily chart, all right, here's an updated chart because this has all the price data on it. You can count 5 waves even from here, from 99.39, from 12.8, that's ECB. 1, 2, 3, 4, 5. Okay, so look, we're close, we're close, we're close, we're close. Real close. Okay, now let's move on then to the dollar, or to euro, excuse me. Signal down here, that's when we want to really take part, in my humble opinion. Okay, let's go to the euro. So one of the euro special reports from back in the day had talked about the possibility that we were looking like the inverse of 2004. The implication being that you would actually end up trading to a low in the last week of the year before you ended up bottoming and rallying substantially. There's reasons for this as well. Okay, when you get big turns around the new year, some of you may be aware of it, but tax reasons are actually a reason for it. People will dump their losers, and euro's been a loser this year, not significantly, it's down like 5% on the year, but people will dump their losers and the last day of the year for tax losses. Last week, last day of the year, or around then. So while I think we are so close to a high in the dollar, low in the euro, I'd like to wait until next week before really potentially doing something with the euro, and maybe something quite big. And here is, again, the long-term slow picture. This is the big trend line that we broke, right? It held for so many good lows, and but it was not to be. So I'm wondering if the correct slope to follow is actually this one off the highs. If you put a parallel from here, you can see it's actually very significant. It's really when the break was. If you put a parallel from down here in 2000, you get an intersection at about 101. All right. And here's what I mean by the inverse or the mirror image of 2004. So this is 2004 on a weekly basis, okay? I'm going to copy that. We're going to copy that. We're going to make it a mirrored image, and we're going to overlay it with the first week of 2016, which is right here. And lo and behold, here we are. Okay, so you can see it follows pretty well, right? You have a little more, I guess call it intra-week, intra-day, kind of crazy spike moves that were a lot more difficult, I think, and threw people off a little more. Again, you have the election here, okay? You have the ECB here, and FOMC is actually doesn't really show up on this chart that well because it's pretty minuscule. Eileen goes, how does your brain find those analogs? Eileen, I don't know, man. You gotta, I'm a weird dude. I look at these charts a lot, I guess, and mine works a little differently. You just ask Mike about that. But anyway, so here we are, and fits super well. The logic last week of the year fits really well. So that's, that's what I'm looking at. I think maybe the last week of the year, which is next week, and I'll do a webinar next week, next Wednesday. If you guys have been around for a while with me or with Mike, you know this. Some of the biggest trades we've had, I'm talking like 700, 800, 1,000 pips, have actually been put on the last week of the year. If you're Euro Yen 2014, December 2014, for example, you'd get these big shifts at the end of the year, and this is setting up so perfectly for one. Just with where the sentiment is, where the where the market's trading, the analogs, the time of year, everything. So this is a really, really big potential opportunity. And this is where also the using the square roots will really come in to work. So if we're looking for this new low, we that channel's below 101, right? If we pull up Euro, see where the square root relationships are down there. The top this year was on the 7th square root relationship. -7 gets you 101.41. -8 gets you 100.38. So if we get down to one of these, it's time to be long. If we don't, and say we start turning up, then we'll look for support on one of the square root relationships. And once you get support on a relationship, then you can, look to be on the long side. So you have a plan or a way or a method to at least get into the market, even if it turns before you think maybe it's supposed to. Okay, that's the biggie here. It should cut down significantly, I think, on missed opportunities, which is something that I've struggled with for quite some time. All right, so there we have that. So there's Euro. That's my Euro piece. Pound dollar. Since we are getting into the end of the year, why don't we take a look-see at some even longer term cable stuff? And this really puts it into perspective. You got to look at a log chart here. 36% drop and a 36% drop. If you got that from here, you would have about 110. All right, 110 intersects beautifully with, on log scale again, the trend line from 1992, 1998 across the 2009 low. We also have, of course, the 8-year cycle lows, 1985, 1993, 8 years, 2001, 8 years, 2009, 8 years, plus 8 gets you 2017. So we might see the biggest low in a very long time in pound dollar in 2017 at 110. I do think that we get to 135, 137 though. In fact, that might be resistance before we get down to 110. All right. So this is all fine and dandy. You can't possibly trade on this because this is a monthly chart. So let's go to something a little more close to home. Still have a short on here. It might actually end up working out better than I previously had thought. We are getting a little long in the tooth on the wave count here. But again, the stop continues to be safe. So if we're going into the final little dive, dumpster dive, if you will, here for cable, I will be looking for low on this lower parallel. And I mean, I think that's probably your best course of action here is to do just that. Okay. Look for lows down in the mid 122s at this point. I mean, it's not, I'd love to say that I have a very specific level for cable, but I don't. Here's the funny thing about cable. The square root relationships, I only do 20 of them. And pound dollar, got murdered so hard this year that it went through all 20. Okay, the 20th was actually support here in November. Okay, that's why I was targeting the 123 initially. If we continue to go, the next one comes in about 121.83. Okay, so that's what. Hey, Conwell, how you doing, buddy? We'll get to your nat gas and all that stuff in a minute. So this is, this is what I'm following at this point. I would look for the lower parallel. If you want to let it ride, let it ride. Might be best to just take it off at the target, which is more or less under a new low, under 123. And then maybe try to, think about the long side actually once we get into next week when, we think that we could get that big dollar top and reversal being the last week of the year. And pound could see even more of an influence as far as getting smoked on the downside for the last week of the year before it bottoms. Eileen says, should we be putting some Bitcoins away? Oh, Eileen, might be late on that one. I think Bitcoin's going to 1,200, and then I think it could top for a bit. But yeah, I guess follow that chart. Just follow that chart. That's all there is to it. Each time, follow that channel. Get to support, buy some support. Gets to resistance, sell it, or sell some. So that's pound. We could get a bounce in pound, or a decent low, I should say, on this lower parallel. I'm just not sure of the horizontal level because we've got, the longer you go without getting there, the lower parallel is, but also then the more likely that you are to get a raised floor. Okay. Bottom line, one more drop, not sure how low, but then I get out of the short and even think about the long side. Although to be long, I'd want us to drop and then come back above 123, okay, and put a stop under wherever the low is. So does that make sense? Be short still, a little late for new shorts, but be short, target down, lower parallel under 123. If you get a reversal bar from under 123, which is people trying to buy now and they get stopped out, you get a reversal bar from under 123, get back above 123, long, stop below, whatever that low is. That's how I want to look at pound dollar. Pretty clean, the short-term technicals and the pattern on cable. All right. How about Ozzy? Ozzy is one that I think could really be a super trade of 2017. So let's see here, one sec here. Aussie dollar, go to the long-term piece. All right, Aussie dollar. Simple chart. This is, the charts that I'm showing here are the ones that are on the long-term page and stuff for now. And then I'm showing some other stuff shorter term. But same thing with the cycles. 86, 93, 7, 8 years apart. 2001, 7 years apart, 8 years apart. 2016, which is still the low, right? So Aussie may have made its low. Another reason to suspect that Aussie made its low, and so we all know about retracements, right? Like Fibonacci retracements. Well, there's something called an absolute retracement. This works well for stocks. If you're looking to call like the bottom of a crash or something, right? You can multiply it by 0.382. A lot of times you'll get that. That means there's an absolute retracement of 0.618. But what we've got here for Aussie is 110.80 times 0.618. means 68.50 or 68.47 is the 38.2 retracement of the entire rally. In other words, it fell 38.2%. Well, the low was 20 pips below that. Pretty good as far as being a precise level, I'd say. So I'm working with the assumption or the idea that we are actually at a pretty darn big low. And you know what the monthly reversal level is? 70.82. Close of that month is 70.82. Okay. Do you know what else is at 70.82 or so? Two legs down. I know this is messy, but two legs down from the high on April ABC, two legs down is 70.88. The flag extension pattern is 70.97. There is so much stuff. It's 70.80 to 70.90, and it's not far away. I think it goes there. That's why I've been suggesting in the swing updates to err on the short side. Okay, your resistance, we actually traded up 4 pips shy of the year open today and came off about 40 or 50 pips so far. We could still get up around there, okay? But this is your slope to follow. That's simple. Okay, so you've got this, the median line as well. So those are the levels for Ozzy. But yeah, I think Ozzy could really get into a big time low, you know, we could get a third wave higher in Ozzy. This is your 1 or A, B, C, 2 or B, and the next move is going to power higher big time. Okay, so that's Ozzy. Looking forward, probably one of my favorite ideas or opportunities, potential opportunities, I should say, really, for 2017. Kiwi is one, despite the dollar narrative of it being so overheated, this is one where I like the downside. You've got such a clean, longer term picture here. And such big bearish potential, right? I mean, with the double top up here, the retest of the double top, this chart, putting all of what I think I know aside about the dollar and thinking that it's so-called, near a top, Kiwi is one that if this plays out, I mean, you could end up down in the 50s. All right. That's where the longer term lower channel is. Does it mean it's going to go there in a straight line? Of course not. But that's why we look at these charts. So with Kiwi, here's the 60-minute. It's pretty clean. Go to the 4-hour. So with Kiwi, we still haven't gotten back to the median line. I still think you get the median line for a sell. Okay, 68.27 is the year open on this one, and that's a spot where you could be looking at a bounce. Okay, but again, the big area that you want to take it down to is the trend line that goes back to 2015 and January of 2016. And that actually is the very end of the year on the lower parallel. So you could end the year in Kiwi down at a low, at least an interim low. So with Kiwi, I'm looking towards 66, 75 or so, which again is the intersection here on this low. And I hold a bearish opinion on Kiwi from a trading perspective, as long as you're below the median line. So at this point, you could probably just tighten, or move. You notice like yesterday when I had the new order in, I had the order in with the stop move down from 70.05 to it was like 69.95, right? There was no need to risk that much at this point or risk any more than you need to. So I do think that Kiwi still, if you get the opportunity to sell 69.60 or so, excuse me, you can put yourself in there with a 30 pip stop and you'd be looking at basically, 300 pips almost potential. Even before the first bounce area, you'd be looking at 130. So, 4.5 to 1 on the first even area of possible support, and really 10 to 1, 300 to 30 on, on potential downside. And that's your Kiwi. So I like Kiwi on the downside, and that's it's also you see it on the crosses, don't you? You can see it on the crosses. You can see it on Euro Kiwi, for example. Let's take a look at Euro Kiwi. Euro Kiwi, we had some reversals last week. We had J spikes in Kiwi Swiss and Euro Kiwi. Okay. Here's Euro Kiwi. Let's put on the J spike on the weekly basis. All right. So in magenta, all right, J spike, we're following through on it, looking good. We've seen some big turns on this one. Okay. So on a daily basis, look at Kiwi Swiss too for fun. Conwall, I will get to the questions, my friend, in just a moment. Okay, so here's Euro Kiwi. And you have this move higher. Looks like an impulse from the low. But understanding that you might not get you have a big outside day here, and you might not get a pullback that you're expecting. So what you do now, this is how we can use the square root progressions to our advantage. 150.30 is a square root progression. Okay. In fact, it was the low back in September. We can look at that now as a support region. All right. So that's something I would look at for support. And I'd still rather be, I think, short Kiwi at this point than long Euro Kiwi. I'd like to wait on Euro for next week. I'll let Euro prove to me that it has a low in place rather than trying to catch it. I'll try to catch it if we get into next week and are, dumping into 101 or something, 102.50, but probably closer to 101. If that's the case, then yeah, start, look at Euro and get real excited about playing hero, which isn't usually a great thing to do, but sometimes can be a really great thing to do, and it happens very infrequently, but can really do well with it. All right. So there's some Kiwi stuff. What about CAD? And I'm going to get to dollar yen, obviously. I'll look at crude. Conwall will probably be very happy to look at crude. Okay, so dollar CAD. I continue to think that, dollar CAD, here's the monthly chart of dollar CAD. We forget that we topped at the 786 retracement and we put in this huge reversal. All right. In fact, we're trading at around the 61.8 right now. And then this decline, we stopped at the 50. Okay, and we have this, you know, we have this this crawl higher on the daily chart, right? And the crawl higher on the daily chart for dollar CAD, if we put in a top up here, which again is the 50% retracement, it's also a square root level at 35.80. If we put in a top, then we should find resistance no higher than 34.63. Okay, that's another square root level. It's been resistance before. And then of course you have the trend line, which is just below it, right? Just below it. It's 134.50. In fact, tomorrow it's 134.43. So if we to get up, this is not one where I say put an order at 134.50. This is one where I say I want to see a response there. Still very up in the air, obviously. I'd like to see a move into the level, get a reversal, like a 4-hour reversal would be great. Okay, and then put on something on the short side. So with that, why don't we take a look at crude oil? And then there's some very interesting seasonal things I think that we should pay attention to with crude oil as we get into next week. Or sorry, next week, but next month, and which is also next year. Here's the Bitcoin channel, by the way. It says log scale. You have to look at it on log. If you don't look at it on log, it looks like this. Log scale. So first resistance about 900. If we go into a full-on blow-off, you're going up to this thing, which could be 1300 plus. Okay. Crude oil. I don't think that we get to at this point. I would not think that we get to 46. Okay. The lowest I'd want to see crude at this point would be on this parallel, which if you fell straight in a line over the next 4 hours, you would be even above 46. So that's not going to happen. 49 is still a level to watch at this point. Look, my thinking is simple. Crude's broken out. Okay. A lot of times after a breakout and after you get a move that is very highly publicized, very highly known, full of emotion and participation, right? It's rare that the market just goes, breaks out, and then just goes and continues to go. Usually it takes a little bit of back and fill, a little bit of consolidation, and I think that's what we're getting here. So I would think, well, the first place that you want to look for support is the low day close of the consolidation. Okay, and that is actually the close of the 1215 bar, which is 5104. Okay, that really is the first place that you want to look. 5104. All right. But the chart that I wanted to, kind of make you aware of is the seasonal aspects for crude oil. Okay, crude oil is typically actually very positive in the beginning of the early part of the year, the first 6 months specifically, but all right. So here's crude. You can see that the seasonal aspects start to turn up for shorter term seasonal components or shorter term seasonal stuff really after the first 2 weeks of January, so mid-January, right? The longer term, the 30-year seasonal study turns up the first week of February. So, it would not be much of a surprise to me, and I think it fits very well with what we're seeing in the pattern from just a classical charting perspective. We've broken through this trend line. Okay, we consolidate above this trend line, maybe tighten the range up a bit, consolidate between a few dollars range for a bit, and then we really start to take off in the next leg higher, some point between mid-January and late January, early February, right? That would be, I think, that's just a scenario in my mind that, a narrative that I'm kind of really, really like, right? Really agree with. It has a lot of components to it that match. So, for me, there's nothing for me to do from a trading standpoint on crude up until really mid-January. I'd like to let it do what it's going to do. Okay, chop around. I think we're going to be probably back and fill in a range. Upside risk is still where the risk is because we have broken out. But I don't think that the big money is going to be made until you get the next big move, and that is probably at least 3 weeks away. Okay. But as far as price levels are concerned, if you are trading this or you do, want to trade on a short-term basis for crude oil, yeah, look, 51.04 is the level to watch for support as long as you're under this high. You could still pay attention to, this resistance line is just here at the high. This is the former support, okay, which has been resistance throughout December, right? And then if we look at nat gas, this was one chart we had. I believe I actually had a different chart up, didn't I? Yeah, this was the chart that I was looking at. So the big level for nat gas that we had identified was a combination of this 25 line from the slope way back here, right, going back to 2006, and essentially the median line. So if you look at it on a daily basis here, you should be comfortable with crude or with nat gas. If we were to take a parallel extended off of this, you get a pretty good, probably get a pretty good touch on that. Yeah. Okay. So off here. So with nat gas, like it higher still. I like it until at least a new high, which is 385. You can see that parallel extends off of the October high as well as the highs from earlier this month. Okay. So for a range for trading, this close, which is 372 to this parallel, which is 385. Support at this point should probably be about 338. Okay, no lower than 331. But this is you can see the drop here. This is a little bear trap. So I'm expecting this to spring us to a new high in natural gas. An aggressive target would be up around 412 for nat gas. Okay, how about some dollar yen? So dollar yen, by all accounts here, it looks like we're going to make ourselves a fresh record with dollar yen. Barring a collapse over the next couple of hours, which, look, I guess anything's possible, but we will have been above 70 on RSI for 28 straight days. Right? There's no rule that says the market can't stay above 70 for freaking 1,000 days, right? But by any historical standard, this thing is stretched. We've broken all sorts of records as far as, breakout, 3-week range, 3-week rate of change, 4, 5, 6, you name it. 3-month, it's all history at this point. Okay. But this is a pretty good measure of, because it takes into account time and price, right? It's telling you that the market's been extended, so-called. And remember I wrote a piece back in the swing update back when we first got above 75 back in mid-November. I said it's actually a bullish thing. It's actually bullish, okay? The first time you get above it. Well, now we've been above it for 28 straight days. So here I wrote the summary of it last night, but you can see this was the last time in December 2014. We were there for 27 days. We then fell 600 pips in 6 days. Okay. And the only other time that's even comparable at all is back in 1986. And that's when you were in a downtrend. And we had 27 days. You got 1 day up. We were at 179. The market then fell to 175, and then it rallied to 183. And this was after, Bretton Woods. This was when the dollar was in its biggest downtrend of all time. So we certainly are in a pretty historical level for dollar yen. For dollar yen, look, is there a top in place already? I have no idea. I think that the next 500 pips is down, but the next 100 or even 200 pips could be up. Okay. And if we look at the dollar yen chart on the monthly basis, I think that we get something like this. Okay. Like we're basically here, but it's the opposite situation. So you could get a move back, really back towards 110, 60, 111. And Eileen, I see your question. I'll get to that in a sec. So, here we are. You get this long-term trend line at 120, 30. On log scale, it's higher, 123, 35. I think we failed before then just because this move is so crazy stretched. And the picture that I want to follow is this one. And you can just, this is a chart that you're going to want to follow, I think, maybe for potentially for years. So we're going to define the entire move off of this trend line. Okay. And if I lock that. And if I put the, some other, see here, 0.5, let's go 0.75. Let's go 0.25. This is arithmetic scale, right? Arithmetic scale, we've actually already reached the median line. Okay. And your next spot for support, your pullback would probably be about 114.50, because you can see that's where this level comes through. And if you look at it on a daily basis, you can see it quite well, right? Well, you have to consider log scale at this point too, okay? Because we are looking at a longer term chart. And I don't want to get caught looking at the wrong scale and taking a short position and losing out on a trade because it goes to one more high and then collapses. So if this is what we're looking at, which if this is the correct one, and I don't know which one's the correct one at this point, right? Then mid 119s is still your area. You know, I'd like to say that this is the arithmetic scale is the right one because look at the horizontal levels we have here. Okay, look at that. It's beautiful. And this would be something else. Ultimately, the big buy on dollar yen might be down back at what's the 25 line, right? Which is the midpoint between the lower parallel and the median line, and that's going to get you down probably near 111 at some point, or depends if you get where you get there next year. But that's where you've got you got this stuff here too. Okay, so that's probably where it's going to be. So obviously we're trading near 118 right now, and I think we get to 111 or 112 at some point in 2017. So what are you going to do? Just put on a short right here and hope it works? Probably not the best call as far as a tactic's concerned. This is where our square root progressions will come in. If we start to find resistance on one of them, then sure, there's an opportunity to take a short. If we let's look at dollar yen here. Go to 240-minute chart, okay? 118.05 is the square root progression. We have found resistance there the last couple of days, all right? We've also found support near 116.92. So for me, a short would be if you broke below 116.92 and then found resistance on it because it was also prior support. Okay, so, until then, I'd rather wait until you get what could be a final blow off into 119.50 or so. You might as well try to, practicing patience is like the biggest thing in the world. You might as well try to wait until everyone cries complete uncle. If I look at the analog that I suggested might be something to follow, it's looking interesting still, right? This was the one from last night we're following from January 13th, 2013. And, the general idea, this is not something where you're probably going to time entries on it, but the general idea is, that we were going to go ranging for a bit. So, we've dipped, okay, fine. Maybe we turn up now and rally into the, towards the end of the week, fine if you do that, and then you come off, so basically it's saying here that you want to fade new highs, right? You don't want to chase weakness, yet either. If we start to break down, that's one thing, but at this point, this is a dip, a small dip in the grand scheme of things. If you start to, break down, we'll change the tune. But here, don't get caught selling at a bad price. Okay, if we go to a new high, then look at that 1950 area or so as one where you could fail and then get a really sharp reversal lower. Okay. And I will bring in one more yen cross actually because, let's say that dollar CAD, right, is one that I'm looking for resistance. So it would make sense then to think about a potential CAD yen idea. CAD yen looks like it could have itself a head and shoulders here. Let's see. Go to CAD yen here. Daily chart. Okay, so CAD yen came in, took out the highs from April, came back, checked the year open. As long as you're above the year open, there is potential for CAD yen to hold up. All right. Below there, you're heading back for probably a check on this old trend line down here. Again, I'd rather trade the different crosses separately, okay? But I would keep an eye on CAD yen on 87.30. 87.30, it's where you closed 2 days ago, and that was the low, and the low again was on the year open, right to the tick, so it's a good reference point. As long as you're above that level, it's possible that you actually don't have a head and shoulders, right? But that you're going to fake everybody out. More something to monitor. Don't like chasing yen up here. Not my idea of a super duper trade. Okay, Eileen had a question on the 24 average thing. So when you get a sharp trending market as we've had, and this is obviously for a very short term kind of scalping idea or building, kind of a pyramiding position, which is always dangerous, but can be quite profitable, of course. Of course, you can blow yourself up too. The 24-hour average is one that I look at as, as long as you're below it in a strong trend, it tends to act as resistance and support. So, for my entries that I'm putting out on the swing updates, they're not really appropriate for that. I don't put entries based on that, put it that way, because the entries I'm going to be put on are going to be based on looking for bigger moves for the most part, right? But you can see for Kiwi, just for example, which has been a very straight line downtrend lately, you've had the 24 average been really good resistance on bounces throughout this week and last. Downtrend back in, in November, 24-hour average. Let's see. Dollar yen, dollar yen it kind of slipped below it actually most of the times. Ozzy, it's worked pretty well. Aussie, this is Aussie yen, not Aussie dollar. Aussie dollar is right here. Aussie dollar, it's right here. It's worked pretty well, right? So it's more of just, an observation that in very strong trending markets where you get kind of those moves where you get very little pullback, you'll tend to stop at the 24-hour average. Explanation is that it's almost like the VWAP for FX, okay? Volume weighted average price. It's kind of similar in the way that it acts, I should say. All right. So cool. I hope that helps. All right, so let's do a quick summary. Euro, we could be looking at the buy of a lifetime next week based on the comparison with 04 and the end of year tax stuff and the exhaustion. Same could be said obviously for the dollar on the top side. Kiwi still like the downside, even against the dollar. Dollar CAD, I'd really pay attention to 134.50. Dollar yen, would rather sell a new high than chase right here, kind of coiling up, not much going on. Or if you start to break under 116.90, I'd be looking at 116.90 as resistance on a back check. And yeah, those are the biggies, I think, for me. All right. Look, still watch Euro 105. I mean, that's the former support line, channel line on the downside. So, if we're going to get into the, exhaustion lows next week, 105 might be your spot for, for resistance. Okay. And that's it for me, really. I will have the post out tonight. I'm not going to have a post Thursday, barring some crazy market moves that I feel like I should write about something. And then, so I'll have a post tonight, and then I'll have a post on Monday, okay? Not Sunday, because Sunday's Christmas, and everyone needs at least a day off a year, right? So we will have, kind of a break here for a day or two, right? Thursday, Friday, and Sunday, we'll have really nothing going on. But we'll have a post tonight. We'll have the next post then will be Monday. Again, barring something wild where I feel like I need to put up an emergency update or something. All right. Everyone have a super Christmas or whatever you celebrate, and Hanukkah, whatever. And thank you all so much. And enjoy the rest of your week, and enjoy your loved ones and your family. Nothing's more important. And thank you all. Okay. Bye.